All right, guys. Well, the multifamily crash that I have been talking about for over a year is officially in Nashville. I am about to show you an 8-figure property that lost 30% of its value, according to public record. And believe me, guys, I called CoStar because I didn't believe this. And I was like, hey, walk me through these records and let me just don't call me crazy here. And we walked through the records, guys. 30% loss. Now, there obviously is some nuance to some of this, but what I am going to show you is the beginning of what I think is going to come. And I'm even going to show you another property that I have on my sites that I think is going to be another disaster. You're not going to believe this. This is one of the craziest videos I've ever done. Let's start with some context here. April 25th, 1010 Church Street, to define Nashville's skyline. Now, what made this headline so fascinating to me? They closed a $232 million construction financing deal. Beautiful building, gorgeous building. I mean, I'm a huge fan of this guy. He has changed the landscape of downtown Giarratana. Tony Giarratana. Did I even say his name right? God, I can't say his name. I massive respect for the guy, though. Really, truly. Nashville looks better because of this guy, okay? Huge fan. Look at that alcove, empty in the background, only 70% occupied. Prime, supposed to be delivered this month, and who knows, they probably pushed it back because there's no way they need Prime right now. They haven't even filled up alcove yet, and now they've got Prime. It just doesn't make sense, okay? So here we have this, and of course there's bullish headlines like this. Oracle surprises Austin by deciding they're going to move to Nashville. Everybody's rah, 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 and there's just such momentum in Nashville City. The housing market is doing great. We have yet to see any kind of major problems in the commercial real estate space, even though we know it's a disaster, guys, right? I mean, offices are empty everywhere in Nashville. Multifamilies are hovering at 70% occupancy everywhere in Nashville. Vacancy rates up to 12%. Okay, it's much worse downtown, which is what we're going to talk about here in a minute. But the vacancy is 12%, 8,900 absorption. Awesome, guys. That's a great number for Nashville. It was in 2022. It was like 3,000. It had been cut in half, 4,000. It got really bad, which, by the way, is a risk, right? If we go into a recession, are we going to go back to those numbers? It would make this just complete disaster because we have 18,000 under construction and they're still building, right? Everything they build this year is just creating more and more incremental empty rooms. Not that there's not a lot of people moving here. There's tons of people moving here. The migration is actually accelerating. Guys, this quote in the Wall Street Journal, I mean, I'm going to frame it. Nashville's booming. The locals fret about their future in Music City. Why? Because of this one line. Let me find it here. The migration from other states is accelerating. According to census data from 2010 to 2014, Tennessee added 29,000 residents annually. From 2015 to 2021, they added 49,000 a year. In 2022, the most recent year the census has reported, Tennessee gained almost 90,000 residents through net migration, which is causing people to just speculate and build and build and build. And these buildings take 5 years. And so they just continue to do it. But guys, the 2-year just blew through 5%. Okay, that's a very important. The 2 years going over 5%, you're getting crushed. If you're in floating rate debt, and a lot of these people still are, they've managed to hang on, they've managed to white knuckle, but we're about to see, oh, how quickly it is changing. All right, guys. So what happened? This is so crazy. I mean, I just can't believe this. So what you're looking at is a map of all the sales that have happened in multifamily since the beginning of the year. January 1, 2024 to now, April 30th, 2024. This 100 plus units, okay, I qualify it, 100 units or more, there's been exactly 8 sales. When I show you this, your mind's going to be blown. I mean, at least my mind's blown. I just think this is insane, okay? There's only been 8 sales. Now, that seems low to me, but we'd have to go back years and just like show you just how low it is. I'm not going to do that this video. What I am going to do, though, is show you just how bad this is, okay? So here's the sales. Here's the sales prices. By the way, we're coming back to Enclave. This is the one, guys. We're coming back. But you got to see this first. Okay, we're scrolling on over here. True seller. Who actually sold these properties? Uh-oh. I think I see a pattern here. True seller. GVA. GVA, 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 GVA. Guys, of the 8 that have sold, GVA is 5 of the 8. 5. That's over 50%. I can't do 5/8 in my head. I think it's like 62.5%. I can't do it in my head. But listen, 5 of 8, 60% of the sales coming from GVA. What in the world is happening? Well, if you don't know, The Real Deal's actually been pretty good about covering GVA. I mean, they are a distressed syndicator that had just way too much money. They got plenty of free money, probably from my 401k. And if you think I'm joking, I'm not, and not yours either. If you own a bond fund, guys, these guys tapped into it to make some really stupid bets that you're going to end up paying for. You think they're stupid, you're paying for it, okay? But that's another story. Anyways, so these guys, this is the foolishness, by the way. I've been wanting to invest in multifamily forever. You know, someone said this once, and I love the saying, you can't outbid stupid. Okay, you can't outbid stupid. These guys, you know, it is what it is. So The Real Deal said, look, GVA is in a bad spot. Can he hold on? They have, I think at the beginning of the year, they had 20 properties. They've unloaded 5 already. So they've unloaded 25. And it's not like they wouldn't unload the others. They started with the ones they could sell. Okay, but now we're starting to see blood in the streets. What do I mean by that? Well, let's look at this property. By the way, I don't know why CoStar put 1,000. It's actually 100 Enclave Circle. For what it's worth, you're looking it up. Okay, so they sold this property in 2024, April 12th, for $51,790,000, which, by the way, they said the vacancy was 49%. That I want to verify. 49% vacancy. Because when you look at the unit mix, it shows it being pretty much occupied. So it sounds to me like they're maybe not advertising all of the units, or the 49%. Maybe it's not 49% vacant. I don't know. But here's what I want you to see. Let's go to sales comps. Okay. When we go to sales comps, we see that this property was sold December 12th, 2022. This is when GVA bought this property. It was in a portfolio of properties, of 3 properties. And you can't look at the sales price, by the way, guys. This is what I needed to validate. If you go to the document, to the warranty deed that they had on this, you will see that this property was valued at $75 million when they bought this property. Okay, so of the 3 portfolios that they bought 3 for $320 million. They essentially valued Enclave at $75 million, according to public record. So whether it's $92 million, that's a CoStar allocation, but the public record said $75 million. Regardless, guys, they sold it for $51 million less than 2 years later. We're talking about 18 months. They lost $25 million on this property. This is public record. This is CoStar data. You guys tell me what you're seeing. You're a multifamily expert. You're an investor. You love looking at debt. I would love your perspective on this. It's not just this one, guys. You remember how I said this was one of 20 properties? 1818 Church. Guys, this one's already been watch listed. This one's in massive trouble. Again, when you look at the unit mix, they're showing that they only have a 5% vacancy. Do we really believe that there's only 7 unoccupied? I don't think so. Here's what I mean. Let's just look at some real quick. Okay, so you can see here, 1818 Church is somewhere over here. They're obviously not advertising on Zillow, although 2010 West End is, and that's the Adam Newman disaster. You can see how many apartments around. I mean, you got 86 available, 65 available, 13 available, 41 available. You come over here inside the belt, 440, and you've got 1111 Church. You've got Alcove. Oh, Alcove dropped their price again. Look at that. Let's see what their promotions are. Get 3 months free on a 2-bed unit and 2 months free on a 1-bed or studio. 2 months free. Guys, my point is this is the beginning. We're just now seeing the beginning. 1818 Church, I've got that one on my radar. The Modera Gulch down here, this one's also really, really bad. This was a construction loan. They're having a very hard time leasing it up. It'll probably take another 2 years to lease it up. Probably, who knows, maybe even less. And that's with probably rent rates dropping over the next 2 years. There's so many new construction. I mean, it's so many. If you're a new construction apartment, you're in trouble. And Alcove, by the way, that's a Giratani. I can't even say his name. He built this. It's a gorgeous building, guy. I've been in it. If I had to live in a high-rise luxury apartment, I wouldn't complain about living in that one. That's probably one I would pick. But look how many are available. Just so many, guys. You try pivoting to Airbnb. Now Airbnb's getting flooded. It's going to be a mess, guys. It's going to spill over probably into housing. Davidson County housing's already struggling a little bit. But this right here, guys, it's wild. There's going to be some major multifamily problems. And we just saw the first one. $25 million loss, guys. $25 million gone in 18 months. It's the beginning. It's just taken so long. Holy moly. Hope you guys are having a good day.